Hi everyone, welcome to another video by Optionables. My name is Saket, and in today's video we are going to discuss more about the intraday trade. So today I have the whole recording of our intraday trade. I'm going to explain each and every step as to what trades we exactly took and also the psychology behind taking those trades, right? So then I'm also going to discuss more about what we can expect from the market tomorrow, because we had certain key events today, that is results of Indian IT company as well as inflation data from US. So finally, I'm also going to discuss about the community trade, where we exactly stand and what we intend to do tomorrow. So before we move on to the video, please make sure that you hit the like button if you're liking the content on this channel, and you can also share this video as well as subscribe to Optionables down below. Now, quickly moving on to what exactly happened to our intraday trade. So as you can see here, totally we made a profit of close to 1,34,000 today with options alone. And out of this 1,34,000, around 80k came from intraday and somewhere close to 50k came from positional trade. So let me just show you the intraday trades alone. So you see that intraday we booked a total profit of 79,962. But when you actually see intraday movement of Banknifty, you see that there was a huge V-shaped move towards the end. So Banknifty all the way from 38,800 fell towards 38,600 and later bounced back towards 38,700. So obviously at this point our stop loss would have definitely been triggered, and I'll also show you how we exactly manage this V-shaped move. The important thing that you have to note here is that I'm not trying to make big bucks with intraday trade. So as I had already discussed yesterday, so I am trying to make somewhere around 1 to 1.5 lakh every week with intraday. Whenever I get opportunity, I just quickly take the opportunity and move out. I don't hold on to the trade intending to make around 3-4 lakh a day, because I have positional trades on the other side. So even though the market does nothing, the positional trade will be giving me profits. So intraday I just try to take some pennies and I'll just move out of the trade. So that has been the idea from past few days. And as similar to that, today morning I tried a simple short strangle in Nifty, that is 18,000 and 18,300. I just came out as soon as I got around 4,000 profit. So I just held it for around 5-10 minutes and I just came out, because initially the market was trading in the range, but the market was also looking very bullish. Reliance was going up. Then after one point, IT started to go up. Banking was anyways holding strong. So I didn't know whether the volatility is going to increase or decrease, and I didn't want to take a risk. So I just came out of the trade immediately as soon as I got around 4,000 profit. But later, I actually started trading intraday around 1 o'clock. So you can see the time right on the top over here. It is around 1:06 p.m. or even bottom you can see it's around 1:06 p.m. And this is when I actually start taking intraday trades. So I see that Bank Nifty is trading around 38,764 and it is seemingly bullish. So there was some constant buying coming in Bank Nifty as well as markets overall, and it looked bullish, and that's the reason we ended up creating a short strategy at 38,800. So 38,800 CE as well as 38,800 PE. So overall we shorted this at 221 rupees and this at 193 rupees. So I obviously kept a stop loss. So what stop loss did I keep? So this time I didn't actually end up measuring 30% or 25%. What I rather kept is around 50 points higher. A simple 50-point stop loss on both. You can see that my sell average is around 220. So I kept a stop loss of 270 for this, and I kept a stop loss of 250 for the call leg. So nothing much to think here, just a 50-point simple stop loss. And I start to add quantities slowly. So right now it's 750. Slowly I take it up till 2,250 quantity. As I had told you yesterday also, I'm not trying to focus on lot of quantity. So just around 2,000 quantity, in case even if you end up losing around say 10-20 points, you will lose 20 to 40k and then you just exit the trade. I'll keep fast forwarding this video and I will just focus on the important points. And you can see it's around 112 and I have entered the complete short straddle, that is 38,800 short straddle. So by mistake, I ended up entering 750 quantity of 38,700 and immediately I changed. So I got 4,000 here, but the thing is, obviously I would have lost from the call leg, so it really doesn't matter. So I just immediately shifted from 38,700 towards 38,800 and I created a short straddle at 38,800 2250 quantity. So you can see that my M2M has now hit around 18,000 rupees because we are seeing that the market is slowly coming towards 38,800 and we are also seeing some pretty good decay happening, right? So next I just hold on to this position for quite a while, and we can see in the chart here we started to see the dip around 2 o'clock. So around 150 we were at 38,700. So let me just quickly move to that part. So you can see that we are almost at 150, that is time is around 150 p.m. and right now we are having a profit of around 18,000 rupees. So not really gone up from 45 minutes back, even because 45 minutes back we were again at 18,000. Even now we are at 18,000. That is because the market is dipping from 38,800. It has come down all the way to 38,700 and we are slowly dipping, and this is not yet expanded. So this is just around 230 rupees and our stop loss is kept at 270 rupees. So now obviously I will go a little forward, and as we know that post 2 o'clock the market starts to dip quite a bit. So as I move ahead, so you can see that the market now starts to fall and we hit the stop loss at 273 rupees. So I had pressed the trigger at 270 and price at 273. So 273, everything gets filled and we hit the stop loss. So now stop loss is hit. Should I end up holding the other leg or not? So the question is, in case if the trend continues down, let me come back to the charts. So in case if the market continues to head down, then you are going to make profit. But if there is a bounce back, you are going to lose money. So the idea was fairly simple. So the only idea I had was, in case if you go to a profit, you only have call leg shorted, CE leg is shorted. In case if you go to a profit of say 10 to 20k, just come out of the trade. There is no need to hold this trade, just come out of the trade. Otherwise, in case if you go to a loss of negative 50k, because yesterday if you remember we made around 1.2 lakh. So the thing is, we should only focus on keeping our losers or loss making trades small, right? So in case if you go to a loss of 50k, just come out of the trade. As I told you, we don't go right with all the trades, we go wrong with many trades also. It's about how we manage our risk when something is going wrong. So simple idea, if you come to any profit by chance, come out of the trade. In case if your loss goes to 50k, just come out of the trade, right? So now I just wait for a while and I see that the market starts to consolidate. Now my focus is just that if market hits 50k or if my M2M hits 50k, I'm just going to exit the trade. Or if I come to 20,000 profit, I'm just going to exit the trade. So there's nothing else running in my mind. So let me just move little forward. So around 2 o'clock, my M2M actually reaches negative 31,000. And at this point, I am now ready with my square off. So I have pressed square off. Only thing left is I have to click on S. And I'm just waiting for the M2M to hit 50k. And once that happens, I'm just going to come out of the position. So luckily, the market slowly starts to dip again. So you can see that it bounced back and it again starts to dip. And I use this dip to come out of this trade completely. So let me just move little forward. We don't hit negative 50k and in some time we also turn positive. And as soon as we hit around 15-20k, I just click on S and I square off the complete position with 15k profit. So there was nothing to lose because I ended up gaining 15k. So even though the market did fall quite a lot, we were still able to book profit and we took the exit. So this trade is right now done. So there is nothing much to worry about this trade. So now I give it some time. There is no hurry to go and enter the trade right away. So give it some time, see what exactly is happening. Let's come back to the charts. After this, there was some consolidation and the market started to shoot up. So the thing is, the trend was bullish from the beginning. It was never really, there was no weakness at all. So it was bullish from the beginning. So I thought, okay, whenever there is a dip, people are aggressively buying. So this means I have time to make my decision. And whenever the market is moving towards 38,800, so even the morning it tried to touch 38,800, it was sent down. Again, it tried to touch 38,800, it was sent down. There was one more try, it was sent down. So the thing is, you sort of knew that at 38,800 people are actually selling, and whenever the market dips, there is some continuous buying coming in. So markets can more or less end up consolidating. So this was the idea what I had, and that's the reason I created 38,700 short straddle after quite some time. So let me just move ahead. So you can see after 20 minutes of my exit, so you can see at this point I end up creating a 38,700 short straddle, and we are 20 minutes past our exit. And within just couple of minutes, the market bounces back and our MTM starts to shoot up. And again, I'm maintaining very low quantity with a stop loss of 50 points flat. So there is no percentage based stop loss. It is a 50 point flat stop loss. And within some time, we go to a pretty good profit of around 40,000 and odd. And as I move 30 minutes ahead, right? So I start exiting the quantities and I have already booked around 63,000 rupees. I start exiting my quantity, and obviously I had purchased far out of money hedge legs. So this is at 40,000, 37,000 just for margin benefit. I had purchased 2250 quantity, and right now we are sitting at a profit of around 60,000 rupees. And I finally decide to book everything and close this trade before 3 o'clock. So as you can see here at 250, I have closed all my trades. Right now I'm only sitting with 2250 hedge legs because I am planning to enter once again after 3 o'clock. Right now I have booked around 60,000 rupees. So post 3 o'clock, I again start to slowly add some positions because I see that the market is actually not going anywhere. It is neither going above 38,800 or below 38,600. So I start to add some further positions, but this time I take very aggressive positions of around 5,000 quantity, because I am just intending to hold this trade for another 5 to 10 minutes. That's all, not more than that. And I really don't see any move happening. In case if something happens also, I'm going to quickly exit. So this is 2 times of what I had gone before. I had gone 2,200 back then, but this time I went around 5,000 quantity. And as you can see that I quickly take the exit the moment we hit around 80,000. So around 223, 225, I just take my exit and book a total profit of around 80,000. So this is how I ended my intraday trade. So there was nothing much to do here. It was just that whenever you got some good profits around 10 to 15 points TK, just remove it. Again, when you see the market consolidate, just put it back in and take another 10 points, just remove it. So it was a pretty simple way of trading. So there was nothing much complicated here. Just keep a 50-point flat stop loss. In case if the stop loss is triggered, then if the other legs give you profit, then just take the profit and come out. Otherwise, just have a minimal loss level which you're okay with taking. Just take the loss and come out of the trade. It is as simple as that. And we ended booking around 80,000. Including the positional trade, we booked somewhere close to 1.3 lakh today. So overall, the market is looking extremely bullish. And that also brings us to our virtual trade or community trade. So we'll just take a look at what exactly is happening to our community trade. So here I have just opened this on Sensibull, and you can see that we did one adjustment today. Since the market was looking extremely bullish, what we ended up doing is we exited our 18,400 call hedge leg. So we had a call hedge at 18,400 and we got the hedge leg closer to 18,350 because we were pretty scared that in case if the market actually shoots up, then we are going to have some loss, and the market was looking very bullish. And along with this, we also ended up shorting some additional 18,000 put options. So it was a pretty simple trade. We shorted some 18,000 additional puts. So this is also known as complementary trade, and we also got the hedges closer. So by doing that, let's see what has happened. So when I come to this strategy builder, you can see that now our max loss is reduced to 6,000 on the upside. If you remember, our max loss was somewhere close to 25 to 30k in the worst case, and that has now just come to 6k. This is mainly because we have got the hedge legs closer, that is one thing, and we have also shorted some additional puts. So now you might ask, Saket, it is looking 90 lakh, the max loss is 90 lakh, so am I really going to lose that? So you are going to lose that only if Nifty comes down to 0 tomorrow, and you know that index is not going to fall to 0 tomorrow, so this is completely out of question. So what if index is going to fall 1%? Then very good, there is nothing to worry about at all. In case if index is falling 1%, it is going to come towards 18,000 itself, and that is much more favorable to you. So if the market comes to 18,000, you're actually going to make money. And in case if there's a flat opening, then you're again going to make money. And what if there is a gap up? So that is what we are expecting now also, because US is pretty bullish, and also the IT stock results are fairly good. So we can expect some kind of a gap up to happen with Nifty, and that means we'll be opening well above our break evens. So what exactly do we intend to do? So the idea here is fairly simple. In case if we are opening above 18,300, well above 18,300, just short 18,300 puts, 10 lots. 10 lots we are shorting because we are actually short on 10 lots. So just short 10 lots of 18,000 puts at 18,300 puts. Let's say you get at an average price of around 35. Right now it's 120. And you can see that at 18,300 you actually make the highest profit of 30,000, whereas if it goes anywhere beyond 18,300 also, you will be still making around 10,000 rupees profit, and anywhere below 18,228, that is close to today's close, you will end up going to a loss. So till then you can end up making profit. This is a very simple adjustment on how you can actually end up converting your entire loss making position into a profitable one. Anyways, we'll discuss more about that tomorrow depending on how the market opens. We might not even have to go to 18,300, maybe more quantity at 18,200 would solve the problem. And just to reduce the margin, you buy far out of money hedge. So maybe something like 17,800. Tomorrow it will be trading around 1 rupee. Just buy additional quantity and you will be bringing down your margin. So this way you can definitely adjust your position. This is only one of the way how you can adjust your position and make a loss making position go to profit. And the idea remains very simple. The moment you hit 1%, right now it's 1%. Usually when you enter the trade, you keep a buffer of 2%. But right now, if you go to a negative 25,000, just come out of the position. There is no need to hold the position and try to adjust that, make it to come to profit. So there is absolutely no need to do that. Just come out of the position and we'll take one more trade. It's as simple as that. So the adjustment still holds good. But in case after you adjust, the market starts to reverse, and then let's say we end up creating a mess, then we can just easily exit the position and think about taking one more trade. So this is the idea for community trade what we have. And coming to the markets, obviously today also FIIs ended up selling for 1,000 crores and DIIs bought for 1,300 crores, and IT stocks are looking extremely positive. Reliance is looking extremely positive, and even the banks are looking very positive. So won't be surprised if Nifty goes to 18,500 in the coming days, and if we hit all-time high again. So that is for the market outlook what I'm having. And even open interest right now is suggesting the same. A lot of short straddles at 18,200, but tomorrow the opening will be quite high. And for Bank Nifty, 39,000 is a very strong resistance. So the thing is, given the fact that IT is going to perform pretty well tomorrow, right? In case if Bank Nifty also ends up performing, so I am expecting slightly underperformance by Bank Nifty, but in case if Bank Nifty also performs, then there is no stopping Nifty. But let's say Bank Nifty does underperform, then 39,000 will definitely end up being a very strong resistance for Bank Nifty, and we should find support at 38 300 to 200, around that range. There is a very strong support for Bank Nifty. So this is the idea, and Nifty, it really depends on what exactly is happening to the IT stocks tomorrow. And as I already told, Infosys, TCS, Wipro, all three of them have announced very good results, and we can easily expect gap up of 1 to 3% from all these counters. So relatively, Wipro has performed little less, but when you see Infosys and TCS, they have done a great job with respect to their performance. So let's see how it goes, and I hope that you guys have enjoyed this particular session. If so, then please do hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining, guys.